Hello, welcome to this channel. My name is Ruben and today I want to give you an update on Silvergate Capital Corporation. This video will basically be divided into four parts. The capital market summary, the catalyst, the financials, and the opportunity and the risks. So what is the company about? Silvergate Capital is a bank based in California. The bank specializes in crypto banking currency clients such as institutional traders that trade various digital assets and crypto exchanges through its in-house payment system. This is called the Silvergate Exchange Network, also known as the SEN. The SEN is a real-time payments network that can clear transactions in US dollars instantly around the clock, 365 days a year between two users in the network. Well, this is ideal for institutional crypto traders and crypto exchanges because cryptocurrencies trade around the clock, and that is different from the regular stock market where you have specific opening and closing hours. Capital market summary. The stock is trading around $178 at the day of recording. The company has a market capitalization of $3.4 billion with a price to earnings ratio of approximately 130. Last January, the company did a secondary public offering of $250 million. Since then, the stock has risen dramatically. Google also shows that Silvergate is paying a dividend right now. However, that's not true. Silvergate doesn't pay any dividend because the company is really focused on growth at the moment. The catalyst for the company is as follows. The company itself gives three reasons: increasing money supply, build out of institutional grade infrastructure, and increasing regulatory clarity. As a result of that, you see that large institutional investors are increasingly incorporating digital currencies into their portfolios. Corporate treasuries are beginning to own Bitcoin, and there has been an acceleration of capital inflows into digital currency infrastructure companies. On top of that, I found additional evidence. Bitcoin continues to gain credibility. Here's an overview of four different entities, such as regulators, banks, institutional investors, and public companies. One of the most recent examples, though, has been Tesla buying Bitcoin for $1.5 billion. So now let's have a look at the solutions and type of customers that they serve. You see that they have four types of solutions. The first one is stablecoin infrastructure that enables 24/7 real-time conversion of US dollars into other digital dollars on the blockchain. The Silvergate Exchange Network, which we talked about, and collateralized Bitcoin lending. Besides that, they want to safeguard and store your Bitcoin and other digital assets. If you look at the type of customers, they serve three types of customers. The first one are the digital currency exchanges with 76 customers. Then the institutional investors, that's by far the largest type with 607. This can be a hedge fund, a venture capital fund, private equity, family office, or another traditional asset manager. And besides that, they have or they serve other customers with 286. So here's an overview of the SEN, and you can also see what kind of customers that they serve. For instance, Coinbase, Bitstamp, Binance, and Gemini. So let's have a look at the financials right now. It's all about growth, and even more growth. For instance, the SEN utilization in the fourth quarter of 2019, they had 14,400 transactions compared to 19,763 in the last quarter. You can also see that transaction revenue is rising rapidly right now. So let's have a look at the income statement. Silvergate has traditional banking services as well. Net interest income is up 40% year over year. This is mainly driven by higher mortgage warehouse and SEN leverage balances. Besides that, the main driver is coming from non-interest income. Non-interest income is up 55% year over year from digital currency fees. On the other hand, you can also see that non-interest expenses is going up 29% year over year. And this is actually a good sign because non-interest income is growing faster than non-interest income expenses. So let's have a look at the deposits now. The main takeaway here is that the inflow of deposits is going up, while at the same time the cost of holding these deposits is going down. So last year the cost of deposits was 0.84% compared to the last quarter in 2020 with a cost of 0.01%. And you can also see that if you look at the black bars, that the digital currency deposits growth is the highest from the third quarter in 2020 to the fourth quarter in 2020. So now let's delve better into the non-interest income. During the fourth quarter of 2020, fee income from digital currency customers was up 178% year over year, driven by increased transactional volume and related demand for cash management services. You can really see that if you look at the black bars. The cost side looks good too for the non-interest expenses. The takeaway is that the expenses are going up as well, however less than revenue growth. The jump in equipment cost in the green bar here in the last quarter was related to an impairment charge for leased office space and fixed assets no longer in use. Here is a short overview of the common bank ratios. The gist of it is that the common bank ratios exceed the well-capitalized standards. The drop of the loans to deposit ratio is explained by the increase of the digital currency deposits, which we saw earlier. So for the fourth quarter, it's 30.73%. You can also see that the total risk-based capital ratio over time is going down. In the last quarter, they had a ratio of 23.49%. And you also see a downward trend if you look at the Tier 1 leverage ratio for the bank. The question is, of course, should you buy this stock? Well, here are several opportunity and risks. If you look at the opportunity side, I really see it as an acquisition target for mainstream banks that missed the cryptocurrency boat. You can look at JP Morgan, Goldman, Wells Fargo. Like they are not innovative enough. They are very slow and they missed this boat. So if they want to compete, they can buy out this company. Silvergate Capital has definitely a first mover advantage because they started with this whole cryptocurrency infrastructure project in 2013. There is an increasing network effect because the more people that get on the platform, the more valuable it becomes. You can think about Facebook. The more people get on, the more valuable it becomes. We also saw that Bitcoin continues to gain credibility. There seems to be asset allocation adoption by institutions, and Bitcoin and crypto could play a pivotal role as corporate cash. For every opportunity, there is also a risk. The stock or the company has a really lofty valuation. Price to earnings is 130. You can always question whether the growth is sustainable. Besides that, I see increasing competition. You can think about that. But on the other hand, Silvergate started in 2013 when they started to build the SAN network. And it really takes time to build and develop and adopt all these processes. So at some point, JP Morgan or another bank will come around. But I really believe that it will take some time to develop this, also from a regulatory point of view. Talking about regulation, anti-government regulation might be negative for cryptocurrencies. I actually think that government regulation is the biggest risk for crypto and also for this stock. And lastly, I looked in the financial data as well, and I saw that there is a high correlation with Bitcoin. So if Bitcoin is about to crash tomorrow with 20%, this stock will take a dip as well. So it's all about, do you want to take this risk or not? Thank you everyone for watching this video. I really hope you enjoyed it, and see you on the next one.